budget 2020, everyone has a long wish list. But one of the key priorities for the government, for policymakers, as they say, will be to revive animal spirits. And while there may be a lot planned to revive those animal spirits, one component definitely will be on how taxes are handled for the business community. Today, I'm speaking with a very select panel of experts to talk on this perspective. I'm here at the Deloitte Knowledge Center, and joining me today is Gokul Chaudhary, partner Deloitte India. I'm also speaking with Karthike Dubey, VP Regional Tax, BP India, and Sanjay Chakrabarti, founding partner Tag 8. Welcome to all of you, and thank you for speaking with us today. Let's just dive right in. Gokul, corporate India has already received the big windfall, some would say. Outside the budget, you've had corporate tax rates slashed. It was a promise that was made in previous budgets. It's been fulfilled. Is there really much more to ask for on that front?
Certainly, it was a great surprise that we got the corporate tax rate finally. But let's look at it. The commitment to get to a lower tax rate had been committed in 2015. When the finance minister then, Mr. Arun Jaitley, had said, look, I'm going to take away your tax holidays and I'm going to give you a 25% tax rate. Really what we've got now in 2019 is a 25% tax rate. Of course, now there's an added dimension of manufacturing companies, new manufacturing, getting a 15% tax rate for a limited period of time if they were to bring production. But the commitment to come to this 25% was long overdue. And that brings us to some level of competitiveness on the tax score vis-a-vis other countries. So we are getting there, but not all there.
Why is it then that so few companies have chosen to move to the new regime? And like you said, it came with a rider, right? You let go of your previous incentives and then you get the lower rate. No one seems willing to want to do that yet. Not enough companies. Gokul, you want to take that?
When we did engage with the companies, and I think it's a bit of a mixed bag, nearly a third of them said they will move immediately. Another third said they'll probably take a year or so to come in, and a third probably wanted to hang around with the old scheme. Now, the reason for that is very simple. Some of the companies have invested as per the tax incentives that were provided to them for a defined period of time, and they would like to therefore wait out for the entire tax incentive period to play out. That's one. The second is there's some companies which are not making profits. They have accumulated losses. And really, there's no incentive to move to a different regime unless you sort of either consume your losses, or in other cases, we had a rather harsh tax called the minimum alternate tax. And there's a huge MAT credit that sort of sits with a lot of these companies where they would like to consume before they migrate to a new scheme. So I guess there has to be this transition phase that will play out over the next couple of years.
Karthik, if from the perspective of foreign investment coming in, and right now, while India climbs on the ease of doing business rankings, there are still a lot of questions on how really easy it is to do business here. One of the questions that often pop up is tax stability. Do you think that that's an area of concern you'd like to see addressed in the upcoming budget?
So I think, as Gokul talked about it, a lot of good steps have been taken with the reduction of the tax rate. The APA program has also been very, very successful in doing that. And I think we can build on this positive momentum with some safe harbor rules that can provide other opportunities around transfer pricing. And similarly on corporate tax as well, one of the things that's happening, for example, in the UK, is that you have industry-specific large taxpayer units, so that positions form around an industry and things become more stable. And if there are issues, then they can get resolved more quickly. So I think the direction is progressive, but there remain lots of opportunities, including, for example, there's been talk in the last few days about mediation as well. So I think there are lots of opportunities to build on this momentum and to provide more and more opportunities for foreign investors as well as for Indian companies, from an investment point of view.
Just to get your perspective, in the last few months of 2019, especially, the Finance Minister Nirmala Sitharaman had a series of press conferences in which she spoke about various measures, and a lot of them did focus on reducing what was being called tax excesses or tax terrorism. in various ways. Have we started seeing all of that percolate to some extent?
So I think it really depends on what kind of positions you have been taking, and also there have been opportunities, like I said, for certainty in the past. And I think if you have the documentation and the substance, there is really no cause for worry. It is a question of engagement, and it is a question of being able to provide context to the authorities. And if you look at measures like e-assessment and risk-based assessment, I think from a large corporate's perspective, the opportunities to engage and to progress remain. And the rest is a risk-reward sort of balance. So I think on the ground, things are progressing. Of course, the trickle-down effect will take time, but things are definitely progressing.
Okay. So, the great thing about today's conversation is that we have all kinds of perspective here. Of course, we've come in with the analysis, we've come in from, the large foreign investor perspective, and now Sanjay joining us on the startup space, the hottest space. Everyone is pushing the startup ecosystem. Startup ecosystem doesn't seem to be happy with whatever has happened so far. The angel tax was in part rolled back after the now infamous July 2019 budget. Has enough been done, and what would you like to see?
I feel that in terms of policies, there are a significant number of policies that have been rolled out. The execution of that and the positive impact of that on startups is something that needs to be really looked at. And one of the things possibly is talking to startups who are really small. I'm talking of the less than 25 crore company. So the definition of startup itself, right now it is, you have a 10-year period, and anyone who's digital is within the startup side. So when you start talking of startup, the array is so wide that you're somewhere lost within that segment. So if you ask me, there are a lot of policies around startups which are great, so really good policies there, but getting down, executing it to the end point is what we are looking at. And in case in point today, if I look at a startup and when I talk to people around like me, the biggest issue is giving them the liquidity in doing business. Everything else remains the same. A startup typically is not really looking for incentives and other stuff. We're happy with the tax rate. While I may add in that, LLP is still at 30%. I have no idea why LLP stays at 30% when everyone else has dropped down. So that definitely is something that I would hope gets rectified this time around. But more than incentives, it's ease of doing business in India, with the perspective of a liquidity that gets the startup going.
No, so what can finance minister do about that? If you can be more specific, what do you mean when getting the liquidity going?
So let me, in fact, steps have been taken, and it has to be implemented in the right manner. For example, for MSME, like we are a registered MSME entity, we are supposed to get our payments within 90 days.
The GST refund?
The GST, no, we are supposed to get payment from any corporate within 90 days.
All right.
That's something that as a MSME, government realizes that we need liquidity, and we can't have people, turning the screws on in terms of payment. So what currently happens is we are actually required to pay GST within 20 days from the end of the month. So the moment we bill out, we are paying GST. And invariably, we have people delaying, large corporates, wherein we really don't have the ability to negotiate, delaying it beyond, way beyond 90 days. So effectively, we are out of pocket. So more than anything else, that's something that if we can get people executing. So the policy is there, is the execution, it's somewhere, I don't know whether there is anything that can be done.
There
are a couple of aspects here. Let's remember that the core of our tax codes was written in 1961, which is when the Income Tax Act really came in. And over the period of time, it has become a rather complex document. And then you look at the startup, and startups are all about innovation and innovative business models. And now you try to apply a legacy, complex tax code to an innovative business, and you suddenly struggle for answers. So I think one of the aspects which could be very helpful is, just like Karthik spoke about large taxpayer units, how about having taxpayer units that deal with the startup ecosystem? People who will be able to understand what these innovative business models are all about, and why do traditional tax rules sometimes struggle to fit in and meet what the startups are doing. So I guess the fact is that often it's just about having the ability to converse and to get to a solution and to get to a tax certainty. Now, similar to what Karthik said, there are certain mechanisms for tax certainty. You know, you got a APA regime or you got an advanced ruling regime, but the authority for advanced ruling takes years to give. A startup cannot, then say, okay, I'm going to take my business model, I'm going to get tax certainty through the traditional mechanism and wait for 3 years for an answer. 3 years is very long and probably is a make or break for any startup. So I guess some of those institutional mechanisms, if they could be adapted to the needs of what is a startup, could be very helpful.
Yeah, but like Sanjay said, he's in the MSME category, which includes a host of companies, including those in new tech, including traditional businesses, and there is one rule for them. Are you saying that the measures right now with faceless assessment, the kind of measures being taken to reduce interference from tax officials, have they percolated?
Well, we've just had the e-assessment starting, and there's 60,000 taxpayers who are going through that process at this moment. I think it will be very interesting to see what their experience is like, because the intention is right. Now we have to make sure that the tax administrative reforms have been sufficiently taking place so that the process works. So I guess the important part is, are we able to translate those policies and those intents onto the ground reality? Now, if you look at it, India has done pretty well insofar as the automation of the tax function from a government perspective. We had tax returns going out in a computerized form, electronically uploaded. Now we have the e-assessment coming in. I think these are all measures in the right way. But I think one of the things that taxpayers, specifically if you're an innovative taxpayer or a small taxpayer or an SME, you really don't have the management bandwidth to deal with all of these issues. Question is, how do you make it simpler? I mean, one of the aspects of ease of doing business is we've improved our ranking from 100 plus down into the 70s, but one of the indexes that goes is the ease of paying taxes. And the question really is, what are we going to do to get the ease of paying taxes? Because one of the parameters that's used there is, how many times does a corporate need to go out and pay taxes?
Absolutely.
Is it 3 times a year, 4 times a year? Well, in India, it is many, many times a year. You pay withholding taxes, you pay advance tax, you go and pay your GST. You got multiple taxes. Now, imagine you're a startup and you got nearly 3 dozen instances during the life of the first year, and you are paying taxes. How do we simplify that? So I think that is what possibly the startup ecosystem needs. It needs tax certainty and it needs tax simplification.
So far what I'm hearing is more than any demand for a tax cut. I thought people would be talking about DDT at this point.
We'll come to that.
Or are we in a realistic space, knowing that there is no room really for more tax cuts? What's your take, Karthik? You think there will be some kind of change in dividend distribution tax, because that's been one big ask?
So I would hope there is, but I think you have to be realistic given the state of GST collections as well as the corporate tax rate cut. A lot of the positivity has been given earlier in the year. So I would hope for it, but hope for the best is where I would leave it. But at the same time, I think there will be other measures around the investment side and on the demand side, which all of us look forward to, because I think one of the points Sanjay was making, and if you really think about this, apart from sort of what's the tax outgo, people are looking at, is there a way that you can manage the cash flow around it and sort of the ease and the cost of compliance around it, right? And those also remain key parameters globally in terms of the resources you have to invest and whether it is easy to do. Interestingly, there are also a lot of startups in the tax compliance space, whether it's GST or otherwise as well. So these things are getting easier. I think it's a journey.
And you spoke about the finance minister's pronouncements. The latest set of pronouncements is 1 lakh crore for infrastructure bill.
Yes.
And the question really is, a large amount of it requires funding. And how do we make sure that in India we are able to create the right ecosystem for the fund industry? Today, the fund industry really sits in countries outside of India, and the question is, a lot of that talent is actually Indian talent. They would love to be back here in Bombay and be working here in Mumbai because of the simple reason that this is home. but how do you make sure that the tax rules enable that to happen? So we have to then see ourselves as being competitive to the likes of Singapore in trying to build this fund industry right here in Mumbai.
Should we address the elephant in the room? GST. Let's talk about GST. Now, to be clear, the finance minister she can't do much about GST or anything really in the budget, in the purview of the budget. But talking ahead of the budget also gives us an opportunity to speak about business environment as a whole. And I speak with people from different sectors day in and day out. Everyone talks about GST, its implementation and smoothing it out. Who wants to go first? Karthik?
Yeah, why not? I think the positives around GST is really one common market, and large companies have benefited with supply chain becoming much more efficient. Having said that, the first round of returns after 2 years have just gone in, and so all of us are also bracing for the next round of assessments that are going to come. And I think there are some burning common issues across the industries, especially related to discounts, intermediary services, and a few other matters. And I think as these issues are coming up, the opportunity for the government to clarify them upfront so that this rollout and the first phase of assessments becomes smooth. Really the proof is in the pudding, because if that experience is smoother and like it's a new law for taxpayers, it's also a new law for a lot of the government administrators. So I think if there is these clarifications that provide guide rails, then it will really help to deliver some of the benefits of GST in an era where there is lack of clarity around some of these things.
Gokul, has GST in that sense made a part of the budget announcement less exciting? You remember there was a time when we used to wait to hear, what duties would be cut on what items. All of that has gone now. GST has replaced a lot of that regime, but it has become a big part of every business's life.
It is. And I think one of the aspects is, while we try to simplify GST so that we get the true benefit of bringing in GST, which was to try and get a percentage or two of the GDP up on account of the simplification, I think the other part was to make it more comprehensive. How do we bring natural gas into the GST net? How do we get petroleum products into the GST net? How do we get the remaining parts of the economy which are outside of the GST into the GST? So I think while we try to do a lot of things to make sure GST as it is today becomes more efficient, but I think it's also about how do we make it more comprehensive, because some parts of the economy now sit outside it and some part of the economy sit inside it, and that is not a very good thing to happen.
Sanjay, you want to come in with perspective of GST and what it means in the life of a company like yours?
Right. I think one of the big, very specific to startup is that a lot of the startups use a lot of services from foreign companies. And for those services, there's a concept of reverse charge as far as GST is concerned. So effectively what we are saying, again going back to my basic issue of liquidity, what you're doing here is you're paying the GST on behalf of someone and then waiting for your products to be sold, getting paid 90 days in a best case scenario, then the money comes in. So your time, your cash flow becomes a big issue. So GST per se, again, first of all, I think it's the way the technology around it has been created. After the initial hiccups, I think it's great. It's really simplified, it's easy, you have all the data there. So I think the government has done a fabulous job of putting the whole system together. In terms of, again, just from a startup perspective, this whole reverse charge that we need to bear, and we again, have to wait for a long time to recover that is something a pain.
Gokul, you want to comment on this? What really can government do to enforce timely payments from other parties?
So I think it's the same issue that we experienced when we had the minimum alternate tax. You have tax rules which are good, but the way the rates work and the base works effectively creates a cash lock-in or a credit lock-in here. And a lot of businesses are saying, I have a huge MAT credit which I don't know when it's going to be used. It's the same thing, I have a huge GST payout which I've done.
You don't know when it's going to come.
I don't know when I'm going to be able to use that credit. So there has to be some way to try to make sure we don't have this build-up happening at the taxpayer end. Because yes, we need to have this seamless movement, but can we try and reduce that incidence where people are actually creating balance sheets of these credits?
You know, as I wrap up, I'm going to end by asking each of you to name the top 3 things on your wish list ahead of Budget 2020. Karthik, let me start with you.
Well, for us, I think, you know, things that spur investment and things that raise the demand side of the economy is definitely something to look forward to. I think measures that enable more tax certainty and enable investment, again, especially in the energy sector. We have solar, we have wind, we have natural gas. And India is going to be a very large energy market, one of the largest in the world. So we need all of those investments because that energy will sort of drive the economy. And the third one is, you know, some of the simplifications in GST, and definitely to include natural gas in GST when that comes up as a next step. Because again, that enables manufacturing, it addresses the air quality and the emissions issues as well. So we look forward to sort of this holistic support to the energy sector as far as possible.
Sanjay, you want to go?
Yeah, the first would be ease of compliance and reducing the cost of compliance. Second, ESOP is a big theme. And third is the whole liquidity crunch. If we can look at that closely and see how we can sort that out.
Gokul, let me make it a little tougher for you. Your wish list has to be something which is doable, which is most likely to happen.
Are you saying ours is not?
Well, bringing natural gas into GST is not going to happen anytime soon. I mean, well, most realistic in the current scenario where we, you know, frankly, we're in a scenario where the government has a very tight balancing act. Even things like increasing, you know, disposable income in people's hands. There's a fiscal deficit situation, but that's a whole other show. So your list has to be the most realistic.
Well, I guess if we can move to the more classic way of taxing capital, which is dividends, return on capital that is, away from the dividend distribution tax to the dividend withholding tax, which is more, is one thing. And I think no one's really done the numbers around it, but the assumption that it will be not positive for the revenue, I don't know whether that's true, because a fair bit of India that pays dividends is actually the public sector enterprises. And you know, they will continue to pay to the government the dividends, including what they would have otherwise historically paid as dividend distribution tax. So money really moves back to the government, maybe to a different pocket. The second is, the minute you move the taxation burden to the shareholder, well, the personal tax rate on some of the high net worth individual is far greater than what the dividend distribution tax is. So I guess the mathematics may not really be as bad as what people may be thinking it could be. So really the first thing is, can we move to the more classical way dividends are taxed so that we are better aligned to the world? That's possibly one part. B, a year or so ago, we started having the taxation, although it's a very nominal taxation, on the long-term listed capital gain.
Yes.
And you know, that's really adding complexity to the tax code. And I think, I don't know how much really the government has really collected through that mechanism, and maybe that needs a review. Why should we have more layering of how dividends need to be taxed and how returns need to be taxed in here, or capital gains need to be taxed in here? So I think some part of that cleanup could be very helpful. I think the third thing which I'll go back again is, how do we create a fund industry? And along with that, how do we make sure the certainty comes in relation to the debt that is being drawn down, which will be needed for all this infrastructure funding? How do we make sure that the 5% withholding, which is due to expire this year, gets a certainty of a window, let's say for 3 years or 5 years, so that it is able to be drawn down at the rate which is currently prevailing, rather than the ambiguity that it can be a higher withholding coming in from next year?
Well, fingers crossed that Budget 2020 will be a game changer. There are a lot of expectations riding on this one. Thank you so much to all of you for joining us on the show today.
Thank you.